Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, joined by my co-host Brian Lunton today. If you're new to the show and want to learn more about mining, metals, the broader economy, please do subscribe on YouTube, BitChute, and SoundCloud, wherever you happen to be listening. We have an old friend of the show today, Chris Powell, not only an old friend of the podcast, but a longtime speaker at the New Orleans Investment Conference. He is the Secretary and Treasurer of GATA, that is the Gold Antitrust Action Committee. And he's what Brian calls one of the original journalists. He's been with the Journal Inquirer in Manchester, Connecticut for more than 50 years. So, mate, that's a stellar record. Chris, on your website, GATA, I think it's just GATA.org, if I don't have it in front of me right now, you note a recent settlement, which I guess is a backdoor acknowledgement of price fixing in the gold market. Do you want to clarify what exactly happened? This is in a New York court, but an international case, and what its implications are.
Yeah, there was a number of antitrust lawsuits brought against bullion banks a few years ago, including the London gold fixing operation. Parts of the antitrust suit were settled against Deutsche Bank and HSBC some months ago. The remaining defendants settled a few days ago. Other bullion banks, Societe Generale was one of them. Barclays was another. The comprehensive settlement, when you add in Deutsche Bank and HSBC's earlier settlements, was for $152 million to the plaintiffs in this class action antitrust lawsuit, which was not as big as the $920 million that J.P. Morgan Chase had to pay as a fine to the U.S. government a year ago for rigging the gold and silver and treasury bond futures. But $152 million is still a lot of money, and I don't think it's formally an admission of price rigging,
Right.
market rigging by the defendants, but you can I think fairly conclude they wouldn't be paying $152 million collectively if they didn't think they had a lot of vulnerability if the case went forward to trial. Of course, some of us were hoping it would go to trial because a trial would bring out the evidence of the price rigging. I figured it would never go to trial for that reason. So they got a nice settlement out of it, which I think is a de facto admission that the London bullion banks were working through the London Gold Market Fixing Limited on a regular basis to control, rig, manipulate the gold market. Now, I think this is a huge story, and of course, it's not being reported by mainstream news organizations. There was a small story by Bloomberg Law. There was a major story by Law 360, which got it distributed yesterday. But Reuters, Financial Times, New York Times, as far as I can tell, nobody has picked up on this settlement, which is basically an admission of comprehensive rigging of the gold market in London and the futures in the United States, and it's really being suppressed.
Now, Chris, this settlement was for allegations of spoofing, right? And this really isn't the kinds of manipulation that you're really. I mean, it's obviously proof that they're going to.
No, I don't think. I don't think this case really had much to do with spoofing at all. It had to do with conspiracy. The Morgan case and some other cases have involved spoofing, right. And you're right. That spoofing is not, GATA's hobby horse. We're much more interested in the daily rigging of markets with the encouragement or at the behest of central banks, and that's what this case was about.
Chris, would you clarify the way you use that term, spoofing?
Yeah, spoofing is ordinarily understood to be the rapid placing and withdrawal of orders in the futures market in order to deceive, less astute investors. If you're a major investment bank with the, most advanced technology and can trade on a microsecond basis, you can make and withdraw thousands of orders in a very short time, and you can run circles around other participants in the market and fake them out as to what the real bid and ask prices are. That spoofing is now against the law in the United States, against the Dodd-Frank regulatory law, and U.S. prosecutors have caught a number of traders at it and put them away.
Okay, and but you believe that's still common activity?
Well, it may be less common now that traders have seen that the government has acted about it, but I don't really have any confidence in the regulators in the United States. After all, I think in the last 15 years or so, the U.S. Commodity Futures Trading Commission did 2 or 3 supposedly extensive investigations of complaints of manipulation in the silver market, and each time the commission came out and said, no, we couldn't find anything that was actionable. And then, a year and a half ago, the Justice Department came out and indicted traders for spoofing from J.P. Morgan and other banks, and that spoofing involved the silver market, silver futures markets, and there were prosecutions and confessions and convictions. So I have to ask, how could the CFTC really have been doing competent investigations of the silver market 2 or 3 times, being unable to find anything, and then the federal prosecutors come in and all of a sudden they've got a big case and they've got convictions. So obviously, the CFTC was not as competent an investigator as the federal prosecutors were, even when the commission investigated silver several times.
Yeah, it reminds me a little bit of trying to crack down on drugs in sports, where the regulators or enforcers are always one step behind the people who are breaking the rules. And so, given your such long history as a journalist, and I know maybe you've racked your brains about this, why do you believe financial commentators or journalists have just overlooked this recent case, which to me seems like a serious development?
Well, in the broadest sense, the mainstream financial news organizations now are very connected to the big financial interests, to the investment banks and brokerages. That's a big part of their advertising. Secondly, most big news organizations like to have a at least cordial relationship with the government, because the government is the source of so much news. Now, GATA is not going to be invited to the New York Fed's Christmas party, and we're not going to be invited to the Christmas party at the Wall Street Journal, even though I don't know what it was 10, 15 years ago. We paid $250,000 to put a full page ad in the Wall Street Journal, and even then we weren't invited to the Christmas party. The financial industry, big financial interests are just terribly influential. If you get today's Wall Street Journal, you open it up, you'll probably see a big ad on page 3 for J.P. Morgan Chase, and on turn to page 5, you'll see a big ad for HSBC, and turn to page 7, you'll see a big ad from Morgan Stanley, and you turn to page 9, you'll probably see a big ad from Citigroup. And you turn a few more pages, you don't have to wonder too hard why GATA is not on the cover of the B section.
That's the truth. And Chris, do you think this settlement is going to do anything to keep them from doing it again or continuing to do it? Will it slow them down?
It has to have some deterrent power. It certainly sets a warning up for banks that are thinking of rigging the market. You got to remember, guys, that the London gold fix, which is decades old, has been an antitrust violation in itself It's where the
Right.
big participants in the market got together in secret to negotiate the price for the day. The thing was explicitly an antitrust violation on its face. I don't know how it lasted so long, and I think the antitrust lawyers here, probably working on a contingency basis, figured that was a big fat soft target, and it turned out they were right. But rigging the gold market has been open practice, and it's been open government policy for many decades. It's just, it seems, everybody takes it for granted.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
This is the Inventa Capital interview, and we have Charles Funk of heliostarmetals.com, or Heliostar Metals, and we'll get the URL there, heliostarmetals.com. And the ticker symbols are HSTR for Canadians, or on the Canadian exchange, and then HSTXF for the Americans doing the OTC. Now, there's a lot of action here. We have documented or written about Heliostar Metals in Gold Newsletter, and Brian London has it down as a buy. Also, Brent Cook has spoken favorably about it as recently as the New Orleans Investment Conference. So there's a heck of a lot going on with this company. 2 major projects, one in Alaska, one in Mexico. So what is the key information people have got to know? What are the latest developments?
Yeah, thank you very much. Lots of high-grade gold hits to expand on. That's probably the key. And for an exploration project, that's pretty rare. We've just returned some really strong results in Mexico, in Sonora, and we're just about to start drilling that. We think we can have a win there in the next few months. And then in the bigger picture, our Unga project in Alaska, high grade, and we think can be much bigger.
Yeah. So one thing that's interesting about these is that you are near to actually drilling, like you say, getting things out of the ground. So what is the time frame for these 2 projects? And the key is that my understanding is early next year there's going to be more action. So there's maybe a window of opportunity right now.
Yeah, so we just closed a $4 million financing. I think we just had the last drill contractor at site late last week to get the quotes.
Yes.
We'll be underway any week now. With Christmas, it'll either be we get going in the next couple of weeks, or very possibly the beginning of next year. And so that means we'll have news in February from our Kumro project. It's a great discovery, over 500 meters of strike. We've got multiple economic intercepts on surface. Incredibly, it's never been drilled before. So we think we can have really, really good success there in what's a pretty exciting, never been before drilled property.
Yeah, and I've been listening to a few of your other interviews or media hits, and I actually like the Alaska story. So this is Unga. I don't know how you pronounce this. I assume it's a native word, but the Unga project in Alaska, where you basically dug up almost like a forgotten quasi brownfield option, which people had just overlooked for many years.
Exactly. This was Alaska's first underground gold mine. Incredibly, no one drilled the mine from that day until we got hold of the project last year. We think we've got a huge district. There's already a 384,000 ounce resource at 13.8 grams per ton gold, extremely high grade. But it's a district and there's so many more targets, and our drilling this summer really demonstrated that. We drilled 3 meters at 88 grams gold in the extension of the old mine. We found a new zone called Aquila where we've got 4 or 5 intercepts. We literally could be onto the chute. We've just got to step underneath and expand it. So high grade, and people had, as you said, missed that the small resource could be part of something a lot bigger, and we're well on our way to showing that.
Do you want to talk a bit briefly about the diversification between the 2 mines and how they balance each other? I know one obviously has the winter favorability in Mexico, but is there any other reason to see them as 2 projects that go well together?
Yeah, it's interesting. We put the 2 together initially on prospectivity. I've been lucky enough to have a background of discovery success. So if we don't think the projects are big and potential of finding a big resource, we don't own them. The projects in Mexico were earlier stage and they just needed work to get to drill ready. And honestly, we were surprised how good the results from Kumro were. So strategically, though, as a company, we can be drilling in Alaska for 9 months of the year, sort of from April till November. But there is a few months down period while you're in the exploration phase. And so that means we can pivot to Mexico in the winter and then back up and push on our main flagship Unga project. It's rare and it's nice to have two strings to our bow.
Right on. So yeah, the tickers are HSTR and HSTXF, and go to heliostarmetals.com. Otherwise, if you're not already, be sure to get the Gold Newsletter, monthly newsletter. And Brian has an excellent profile of Heliostar. And yeah, like I said, it's a buy right now. So in great position. Also, as Charles just said, there's a lot of action which you want to get in before, because in the new year, once more information gets in, of course, more institutional players will be on this. So Charles, thanks for your time. We appreciate your sponsorship, and we're glad to work with you.
Perfect. Thank you. It's going to be a fun few months.
Yeah, the point I've made to people is that the argument is not whether the government, well, the burden of proof isn't on those trying to prove government manipulation of gold or really any market. The burden of proof is on those trying to disprove it, really, or counter the argument, because the government has done it at least twice openly with the London gold pool and the treasury sales, although the treasury sales in the 1970s supposedly weren't meant to alter the price or manipulate the price, but of course they were.
The IMF sales as well.
Yeah, that's true too. The IMF sales, Bank of England, et cetera. So at least the U.S. government has been involved a couple of times openly, but also it's well known that they manipulate asset prices, the housing market, the stock market, that there's a put beneath those markets by the Federal Reserve. And, at bottom, they manipulate the price of money through interest rates. So they manipulate everything as an extension of that. So if you're going to argue that they're not fooling around in the gold market, then the burden of proof is on you to prove that they're not, because they've already done it, and as well as every other market. Where I differ perhaps is the level of manipulation. I don't know that the government could be involved on a daily basis, but I do know that various actors out there certainly can be, at least for profit motives, and are, because the market is perfect for that. The futures exchanges are set up perfectly to move around markets like gold for substantial profits.
Yeah, there's a State Department memo from, or cable rather, I think from 1973, or in 74, just as the gold futures market in New York was about to be opened. It was a cable from the chief of station at the U.S. Embassy in London to the State Department in Washington. The guy reported he had surveyed the London bullion banks about the imminent opening of the gold futures market in the United States, and had received assurances that the London bullion banks were so confident that they could inject so much volatility into a gold futures market that retail investors would be scared the hell out of it. Now, why was the State Department so damn interested in the impact of the gold market? Why did it seek and get assurances from the London bullion banks that they could scare the public out of gold using the futures market? That's just one piece of documentary evidence that is out there, that the gold futures market is of immense interest to any government that issues bonds and issues currencies. I'm with you, Brian. I can't tell you exactly what any central bank is doing in the gold market today. However, there is powerful evidence that they are in the gold market individually or collectively every day in the monthly statement of account that's issued by the Bank for International Settlements in Basel, Switzerland, which is the gold broker for all the major central banks. It has a gold position that is recorded in its in its monthly statement, which is examined by our consultant, Robert Lamborn, and it shows changes every month. It had in its gold position in swaps and leases. Now, the BIS would not be trading in swaps and leases if it was not acting on behalf of its central bank members. A couple of years ago, I asked the BIS press office, hey, listen, exactly what are you doing with these swaps and leases? What's your objective? Who are you trading for? And of course, they replied very cordially that I should have a nice day.
Right.
And Chris, there are, we might say, skeptics or deniers out there regarding intervention. And one prominent one is Keith Weiner, whom I know. And what are the questions that you want to pose to people who are reluctant to accept that any price fixing goes on? That they just, normal activity?
I'd first direct them to the documentation archive and the summary that I prepared a few months ago for a conference in Nigeria. It's in the basics section of our internet site. It's really a compendium of the documentation of government intervention in the gold market, not just going back decades, but in recent years, really even in this year. I would ask Keith and anybody else to review that documentation and rebut it piece by piece. Tell me, how have I misconstrued it? How is it a forgery? Even though much of the stuff is on the government's own archives. Secondly, I would ask people generally, and especially financial analysts and journalists, to target 3 government agencies with a particular question. First, let's go to the Commodity Futures Trading Commission and ask it, does the commission have jurisdiction over manipulative trading undertaken by the United States government in the futures markets or on the behalf of the US government in the futures markets? Or is such manipulative trading fully authorized by the Gold Reserve Act of 1934 as amended in the 1970s? I've put that question to the CFTC. US Representative Alex Mooney of West Virginia has repeatedly put it to the CFTC, and the CFTC simply will not answer that question as to whether it is legal for the US government to rig the gold market or to do it through intermediaries. However, I was at a federal court hearing in Boston in 2001 in the case of our consultant Reg Howe's lawsuit against the Fed and the Treasury and the BIS and the various bullion banks suing them for rigging the gold market. And the assistant U.S. attorney in the case got up, moved for summary judgment for dismissal of the lawsuit on the grounds that the U.S. attorney said the U.S. government claims the power to rig the gold market exactly as Howe's lawsuit complained. So the government has admitted that it has the power to legally rig the gold market. It did not admit in that case that it was doing so, but it said the case had to be dismissed because the government had the power to do exactly what Howe complained of. Second agency I would approach.
Well, let me just hold you. So that case was dismissed on those grounds?
No, it wasn't. It was dismissed on a technical jurisdictional matter. The judge did not address the government's claim that it had the power to rig the gold market as the lawsuit had charged. Instead, the judge found that Howe, as an individual investor, did not have standing to sue as he did, which I thought was a real cop-out, but that's how the case ended. Nevertheless, it did provide that important evidence that the U.S. government, when pressed, will claim the power under the Gold Reserve Act of 34 to rig the gold market, not only in the United States, but anywhere in the world. I would move on for Keith and anybody else who's a denier here to ask the Bank of England, what are you doing in the gold market on a frequent basis? You're the custodian of many national gold reserves. Have you been involved in the gold leasing business in, say, the last year or so? We know that the bank has been involved in gold leasing and swapping in previous years. It's really a broker for many central banks in the gold market. Well, a few months ago, I asked the press office at the Bank of England, look, have you been leasing or swapping gold? Have you been issuing leases or calling in leases in the last year? And the Bank of England cordially got back to me and said that information is not available. And I think by not available, they meant I should, drop dead.
Right.
They have the information. They certainly know whether they're leasing and swapping gold and why they're doing it, but they don't want to tell us that why they're doing it or even if they're doing it. That information simply cannot be discussed. Thirdly, Keith and the others should put a similar question to the Bank for International Settlements in Basel, Switzerland, which is the gold broker for all the major central banks, and which has even advertised to potential central bank members that its services include secret intervention in the gold market. We have that PowerPoint presentation on our internet site. So the BIS advertises to potential central bank members that its services include gold and currency market interventions. Now, I asked the BIS a couple of years ago, what is all your gold leasing and swapping about? You're showing the activity in the gold market every month in your statement of accounts. What's your objective here? Who are you working for? What are you trying to accomplish? And the press office of the BIS cordially wished me a nice day. That information is not available either, but it is the refusal to answer that question, just like the refusal to answer the questions to the Bank of England or the CFTC, I think is proof enough that there is a comprehensive central bank intervention going on in the gold market all the time.
Would these press officers, though, even know anything about such activities? Maybe it's not really their, they're not familiar with it, even if they work for the organization.
Well, they'd have to ask their supervisors, wouldn't
Right.
they? And why would they respond to me if they weren't authorized to answer? Well, I'm sure that the individual press people at the agencies don't know all the details, but I think they know damn well these questions are radioactive and must be avoided at any cost.
Chris, we've seen some excitement recently in the gold market. First, as the Fed announced tapering, and then as we got those rip-roaring inflation numbers, gold actually and silver actually responded. Imagine that as inflation hedges again, which seems like there's some big positioning in precious metals right now that's running counter to the forces that seem to try to sell down the metal every morning. The price goes up in overseas trading hours, and then as New York opens, it goes down. It gets sold down every day almost in a repeating pattern, which is suspicious in itself. But lately, it seems like people are taking advantage of that sell-off, and there's big allocations to the metal and coming into it and buying it, and the price has tended to respond in recent days. Do you think there's a shift going on right now in investor sentiment where we're getting big money coming into gold as an inflation hedge that's counteracting these other very regular sell-offs in New York trading? And two, do you think this is going to have, and I know, we'll have our fingers crossed and everything else, is this what's going to break that paper gold market and paper silver market? Is that really, if we get enough demand, do we have that potentially on the horizon?
Well, Brian, if my sentiment meant anything to the gold market, I would have killed myself years ago, and in the hope that marked the bottom. Look, I certainly sense, as you do, a new strength in the gold price in the last few months, and the smash downs don't last as long. The gold price seems to go up even in New York, sometimes on a stair-step basis after the usual morning smash. Look, that's just speculation on my part. What do we know? We know that for the last 4 or 5 years, central banks on a net basis have moved from being sellers to buyers of gold,
Right.
at least in terms of their top public positions. Now, are they buying real metal? Some of them say they are. Are they buying paper claims? I don't know, but certainly the central bank attitude toward gold in recent years has been getting much more favorable. And since central banks really are the primary participants in the gold market, I think that's meaningful. However, I have thought for some time that the gold market is going to be transformed only as it was transformed back in March 1968 when the London gold pool collapsed. And the London gold pool collapsed in March 68 because of just demand for real metal was overwhelming the system. Back then, the United States was flying U.S. Air Force cargo planes on emergency flights over to the Bank of England in London, carrying gold from the New York Fed and Fort Knox in order to replace the gold that the Bank of England was advancing into the market on behalf of the United States to freeze the price at $35 an ounce. After a few months of that, the United States realized it was only maybe 6 months away from losing the rest of its gold reserves at a $35 an ounce price. And the United States asked the British government to close the London gold pool, and it did. That's when the last big break in central bank gold price control happened. It happened because of an exhaustion of the real metal that the Western central banks were prepared to lose. If we get to a similar point again, then we'll have another breakout. And I think it's plausible that we could get that. I mean, look, we've got the secret IMF. We've got on our internet site the secret IMF staff report from what was it, 2010, something like that. I can go find it for it if you want it. But the staff report said that the IMF could not be allowed to require central banks to distinguish their gold reserves into two categories: gold in the vault and gold that's been leased or otherwise impaired for its ownership. The IMF staff report found that central banks freaked out at the idea of precision and candor in their gold reserves, because if the markets ever found out that so much central bank gold was leased and no longer legally in the possession of the central banks, it would be a market affecting event. So, we know that central banking is most worried about gold in regard to the exhaustion of the reserves they are prepared to lose. And I think it's very plausible after, these recent decades of vicious gold price suppression. Look, they got an advantage by being able to mobilize the futures market and not have to use so much real metal for suppression purposes. But they've got to have lost some metal in the suppression since the gold pool crashed in 1968. And now that we know that central banks are net buyers of gold, I suspect the supply available for manipulation is seriously diminished.
What is the conclusion then for the retail investor, Chris? How should he interpret all the information that you have provided and provide on your website, GATA.org? And so, so let's say we agree with you. How should we then apply this?
Well, the logic of the documentation is that there is a vast uncoverable short position in gold around the world. That is that the paper gold is much bigger than the metal available to back it. Jeff Christian of the gold consultancy CPM group testified at a CFTC hearing, I guess 10 years ago, that leverage in the gold market might be as much as 100 to 1. The Reserve Bank of India a few years ago did a study trying to calculate the the ratio of paper to real metal. It calculated that the ratio of paper to real metal was 92 to 1. Well, suppose it's only 50 to 1, or only 40 to 1, or only 30 to 1. Well, that means that most of the gold the world thinks it owns doesn't exist, or is double or triple or quadruply counted. So I think the first conclusion you can draw is that there's a vast uncoverable short position in real metal. Now, if that short position is ever exposed or understood, presumably there'll be a rush into real metal and the price will have to go up. I think the second conclusion ordinary investors can draw is what Jim Rickards said on CNBC 10 years ago. That is, quote, when you own gold, you're fighting every central bank in the world, end quote. That means governments are not going to like you if you get into gold, and governments will probably do everything they can, at least for a while, to obstruct you from making any money in gold, because you're betting against government currencies and you're betting against government bonds. So there's a huge opportunity here for ordinary investors, and I think there's a huge risk.
And do you think that this, despite findings of studies like that, that retail investors will ever just abandon the paper gold options?
I think that's the logic of what they should do. If you want to go into paper gold, you might as well flush your money down the toilet. They can create as
well,
much.
At least you would think that you'd think there'd be more of a premium associated with getting the physical that would be worth more than the paper gold.
Well, there is.
Yeah, how much is that premium, Brian?
Retail physical definitely trades at a premium because of but that's more mint manufacturing issues.
Right.
There are most retail investors who are getting into the sector now are investing in physical, or they're investing in exchange traded products, not exchange traded products, but trusts like the Sprott Bullion Trust, and not SLV and GLD and these ETFs that have JP Morgan as the custodian. So I think that most people who are attracted to gold on a retail level, correct me if I'm wrong, Chris, on this, but my impression has been that these are people that have done enough research. They're attracted to the metals because there is a situation occurring, and because they understand that if they don't buy correctly, then they're not really buying metal.
Yeah, I agree with that, Brian. I mean, I think the wise saying of the business is if you can't hold it in your hand, you don't own it.
Right. There was also a saying which you told me a while back, Chris, I still remember, was that if you don't know who the sucker is in the room, you're probably the sucker.
Well, that didn't originate with me, and I'm sure I've been the sucker in the room many times.
Yeah. Well, folks, if you haven't already, please do consider subscribing to the show. If you want to learn more about Chris's work, it is gata.org. We'll also have more links in the show notes, which are at goldnewsletter.com/podcast. Chris, it's great to have you back on. I look forward to next time.
Thank you, guys. Great to see you.
Thanks, Chris. Really appreciate it. Good talking with you.